All right, first beer out of a fresh keg. Let's split the G. Nice pour. Set that right there for now. Okay, so we're going to talk about some non-QM stuff today. A non-QM loan, or a non-qualified mortgage, is a type of mortgage loan that allows you to qualify based on alternative methods instead of using the traditional income verification required for most loans. Tax returns, W-2s, pay stubs, etc. You don't need any of that. So today we're going to look at qualifying for a home loan using 12 and or 24 months of your personal or business bank statements. So we're going to do an average of 24 bank statements or an average of 12 bank statements. So you probably are asking at this point, why would I give you 24 bank statements when we can do it for 12 bank statements? Well, the reason is pretty simple. The 24 is a larger sample size, and it will get us better terms. So we'll use 12 statements if we have a lack of or a weak 24. Say that the previous year you had a bad year. This year you're rocking. So you want to use those 12 statements. You can't use the other 12 statements if you're having a bad year this year. But you can average them together if you had a good year last year. So and 24 statements. If you have a solid 24-month history and we want to use that, we want to average those bank statements, the deposits on those bank statements, to get a higher income and a better qualifying number for you. With 12, your rates are going to be a little higher, your terms are going to be a little worse, probably a higher down payment. With 24, you're going to have better rates and probably a lower down payment. So these are, you can use personal and or business statements. You can use your personal statements if you just deposit all your business receipts into your personal account, or your business statements, or if you, for whatever reason, have used both, you can use both to qualify. And some don't allow you to use both, but most allow you to use both. This is for self-employed people only. You have to be self-employed in order to use this program. It doesn't work if you are a W-2 employee. No tax returns or W-2s. Okay. A minimum credit score is 620, which is pretty good, but at 620, you're stuck at 75% loan to value, which is a 25% down payment, which is pretty hefty depending on, if you have the cash, God bless you, that's great. But if not, you probably want to bump that credit score up so you can increase that loan to value or decrease that down payment. So 90% LTV for 720 score. So if you have a 720 score, you can put 10% down, which is much more palatable, so it behooves you to get the scores up. And if we talk and your score's 700 and we can get it up to 720, I'll do a FICO simulator on it. We'll get it up to 720. Can be owner-occupied. You could buy it as your personal primary residence. You could buy it as a second home, and you could buy an investment property using this bank statement program. It's pretty neat. You do a purchase, cash out refinance, or a rate and term refinance. Cash out refinance, self-explanatory. You're pulling cash on your existing house. Rate and term refinance is basically you're changing the terms, and what that means is you're lowering the interest rate or compressing or increasing the amount of time that you have to pay it. If you're going to turn a 30 into a 15-year or 15 into a 30, that would be a rate and term refinance. So loan amounts up to $4 million. Each bank is a little bit different. Some banks have $4 million, some have 3, some have 2. It all depends on, basically it depends on how much money that bank has to lend at a given time. So their terms will be better if they have a whole bunch of money that they need to lend, and if they're like out of money, their terms are going to be super stringent and super difficult. So now, this is our non-QM matrix. This is 4 lenders. I just pulled them out from lenders that we use, from banks that we use, and each matrix is different. So we have to take your data and plug it into each matrix to find out exactly You know, are we using 12 months? Are we using 24 months? What's your credit score? Is your credit score 680? Is it 720? What are we doing to figure that out as far as what exactly, where I can plug you into to give you the best term, the best rate, and that way we can, and that way I can get you approved for a specific number at one of these banks, and we'll lock it in. As soon as you're approved, we'll lock it in. So next up, you know what? Before we talk about getting it done, all this talking has made me thirsty. So it's time to split the G, baby. There we go. God bless. Oh, and he split that G. Nice. All right, cool. So, getting it done. Let's get it done now. To get it done, you're going to call me. There's my phone number. Give me a ring. And we're going to complete an application. When I say complete an application, I'm going to gather all the relevant docs that I need. I'll need your driver's license. I'll need 12 or 24 bank statements. Give me 24. Let me figure out if it's better to go 12 or 24. And anything else that I'll need, we'll run your credit. We'll get you to a point where we can plug you into one of those matrices. And once you're in and once you're locked in, then we're going to compare your data with the lender matrices, and then we're going to issue a pre-qualification letter. We're going to get that pre-qualification letter to you, your agent, and get you out looking for a piece of property. You're going to find the right property, and you're going to close a home loan, and it's going to be that easy. And these loans are easier to close than the traditional loans, only because the traditional loans have so many moving parts. These loans have credit score and bank statements. And obviously it's going to depend on the property you get, and if the property's a legitimate property, and you can move into it if it doesn't need work, et cetera, et cetera. So this is the program. This is how we do it. Give me a call. It's a great program, especially if you're self-employed, especially if you're a contractor, or if you have you write off most all of your income. I made $200,000 last year. The IRS thinks I made 10G. So yeah, this is your loan. Send me the bank statements. We'll get you qualified for a piece of property, and we'll get rocking. All right. Well, thank you very much. And tomorrow we're going to talk about something that's DSCR, where you don't even need bank statements. We're just going to base the loan on the cash flow of the property. Very interesting. A lot of people are using it now. It's a very popular loan. But anyway, take a look at this bank statement thing. Give me a call, and let's get this party started. We'll talk to you later.